Stop trying to find the perfect sniper entry. It is a scam sold to you by fake gurus on Instagram who rent their cars by the hour and their personalities by the trend. You see them posting these flawless charts where they entered a trade at the exact bottom of a crash, catching a falling knife by the handle, riding it to the absolute peak, and cashing out with the precision of a brain surgeon. They tell you this is how you trade. They tell you that if you just study the charts long enough, draw enough lines, and wait for the exact millimeter of price action, you too can be a sniper. It is a very confident mistake. The most consistently profitable traders I know actually have incredibly sloppy entries. Their charts look messy, their timing is often a little early or a little late, but they make millions anyway. You, on the other hand, are sitting there agonizing over a single pip. You are trying to be perfect. And here is the paradox of precision. Trying to be perfect is exactly what is keeping you poor. When you obsess over finding the flawless entry, you induce a state of pure analysis paralysis. You miss the actual market moves because you are waiting for a setup that only exists in textbooks. You set suffocation-tight stop losses that inevitably get hunted down by the market before the price goes exactly where you thought it would go. Worst of all, you drain all the mental capital required to execute the only thing that actually puts money in your bank account: the exit. You are not losing money because your strategy is bad. You are not losing money because you are stupid. You are a rational person operating in an incredibly rigged, culturally overwhelming system designed to make you feel inadequate. You are losing money because you are obsessed with safety, in a place where safety does not exist. Let us talk about what you think is discipline. You sit at your desk, you pull up the daily chart to find the trend, you drop to the 4-hour chart to find the structure, you drop to the 15-minute chart to find the zone, you drop to the 5-minute chart to find the candle, you check the RSI, you check the MACD, you wait for the moving averages to cross in a very specific, beautiful way. You tell yourself this is what professional trading looks like. You believe that waiting for 4 different indicators and 3 different time frames to align in perfect harmony is the ultimate display of patience. You feel like a hunter waiting in the brush. You are actually just the prey. By the time everything looks perfectly aligned, by the time the trend is so obvious that even your grandmother could see it, the institutional money has already moved. The hedge funds, the banks, the algorithms written by math prodigies who do not sleep, they entered this market hours ago when it looked dangerous. They bought when the chart looked ugly. Now, the chart looks beautiful. Now, the chart looks safe. So you finally click buy. You are buying the top of the retail trap. You wait for perfection because perfection feels safe. But in financial markets, safety is just an illusion manufactured to get retail traders to provide liquidity for the big players who are ready to exit. They need someone to buy their shares at the top. You, with your perfectly aligned indicators and your deep sense of false discipline, are the exact person they are looking for. You must execute when your probabilistic edge is present, not when your emotions finally feel comfortable. If a trade feels perfectly safe, you are probably the one being hunted. How much money have you left on the table from trades you were 100% right about, but did not take because the setup was not quite perfect yet? This obsession with precision does not stop at the entry. It bleeds into how you try to protect yourself. You find a decent zone on the 1-hour chart. It makes sense. It is a logical place to buy. But instead of accepting the normal risk that comes with a 1-hour time frame, your brain starts doing terrible math. You realize that if you use a normal stop loss, you can only buy a small number of shares. But you want to make a lot of money. You want a massive risk-to-reward ratio. You want to risk $5 to make $500. So you zoom in. You drop down to the 1-minute chart. You stare at the erratic, chaotic twitching of the lowest time frame, trying to find a microscopic level to place your stop loss. You place it right below the lowest little wick on the screen. You feel very smart. You have mathematically minimized your risk to almost nothing. The market opens. The price drops. It tags your stop loss by exactly 2 cents. You are taken out of the trade. Then, the price immediately turns around and rockets straight to your profit target without you. You sit there in silence, the heart rate of a hummingbird on espresso. You stare at the screen feeling a deeply specific type of financial nausea. You made a critical error in logic. You tried to force a low time frame risk parameter onto a high time frame idea. You zoomed into the 1-minute chart to place an ultra-tight stop loss to artificially improve your risk ratio. But market noise does not care about your math. Financial markets breathe. They expand and contract. They sweep liquidity. The algorithm does not care that you wanted a 1 to 10 risk reward. The algorithm just sees a massive cluster of tight stop losses sitting right below a clean level. It sweeps that level to collect your orders and then moves in the real direction. Stop trading the noise. Place your stops based on where the daily or hourly market structure actually breaks, not based on how much money you are afraid to lose. Accept a wider stop. Buy fewer shares. Survive the fluctuation. Are you setting your stop loss based on where the market actually proves your idea wrong, or are you just squeezing it tight because you are terrified of taking a normal loss? Sometimes, though, you get lucky. Sometimes you actually catch it. You buy at the absolute lowest penny of a crash. The price bounces immediately. The candle turns bright green. You are in deep profit within seconds. It is an intoxicating feeling. It strokes your ego in a way very few things in life can. You take a screenshot. You send it to a Discord group full of strangers who do not care about you. You feel like an absolute genius. You have conquered the beast. And this is exactly when the trade is doomed. Because you got a perfect sniper entry, your ego is now deeply attached to the position. It is no longer just a trade. It is your masterpiece. It is proof of your intelligence. And because it is your masterpiece, you cannot bear to close it. The price goes up to your logical target. This is where you should take profit. But your brain whispers to you. It tells you that since your entry was so incredibly perfect, this must be the big one. This must be the trade that changes your year. So you hold it. The market stalls. It starts to pull back. You do not sell, because selling now would ruin the beauty of the perfect entry. You want a grand slam. You hold it as it drops further. You hold it as the massive green numbers slowly fade back towards zero. Eventually, you watch a massive winning trade turn into a break-even exit, or worse, a red loss. This is the hidden flaw of the sniper. Better entries usually result in much worse exits. When you spend 90% of your mental energy trying to optimize the entry, you create a psychological imbalance. You have zero mental bandwidth left to actually manage the trade once you are in it. You overinvested in opening the door, and forgot that you actually have to walk through the room and find the exit. Have you ever noticed that your most perfectly entered trades, the ones you are most proud of, are often the ones you mismanage the worst? Why do you think that is? This mental drainage is not just limited to the trades you actually take. It destroys you before you even click a button. You wake up. You sit at the screens. The market opens. You are looking for your perfect entry. You watch the price go up. You wait for a pullback. The pullback happens, but it does not quite touch your magical line on the screen. So you keep waiting. You stare at the 1-minute candles printing over and over. Red and green, red and green. An hour passes. 2 hours pass. You are hunched over. Your eyes are dry. But your coffee is cold. You are intensely focused on catching a microscopic movement in a sea of random noise. You are suffering from the chart hypnosis effect. Dropping down to lower timeframes to wait for a micro pullback does not give you an edge. It hypnotizes you. The human brain is a pattern recognition machine. If you stare at random static long enough, your brain will start to see shapes. If you stare at a 1-minute chart long enough, your brain will manufacture patterns that do not actually exist. It does this just to justify taking a trade. It does this to relieve the immense physical tension of waiting. By the time you finally enter the market, your cortisol has spiked. Your dopamine is completely drained. You are physically and emotionally exhausted. You have spent hours fighting a war in your head against a chart that does not know you exist. You enter the trade, but you are suffering from phantom fatigue. You are far too tired to manage the exit rationally. The moment the trade goes slightly against you, you panic and sell. The moment it goes slightly in your favor, you panic and take a tiny profit just to end the psychological torture. Have you ever finished a trading session feeling completely mentally exhausted, completely burnt out, even though you took literally 0 trades? All of these behaviors, the endless indicators, the tight stops, the ego, the staring, they all stem from one singular, deep-rooted psychological lie. You tell yourself you are just being careful. You tell yourself you are a precise trader who manages risk well. That is the surface layer. It sounds very professional. But if we peel back that layer, we find something darker. Secretly, your obsession with entry precision is an absolute inability to accept uncertainty. Humans hate not knowing what comes next. Throughout history, we have invented superstitions, rituals, and myths to pretend we have control over the unpredictable nature of life. As a trader, you do the exact same thing. You just use technical analysis instead of tea leaves. You overanalyze the chart because you want to be 100% sure the trade will work. You are terrified of being wrong. You are terrified of losing money. You want a guarantee in an environment where guarantees are mathematically impossible. You are trying to solve a deep psychological fear of loss by adding more technical indicators to your screen. It is like trying to fix a broken engine by painting the car a different color. Certainty is a financial ghost. The market is simply a probabilistic environment. Every time you place a trade, you are rolling a weighted die. You might have an edge. The die might land on your color 6 times out of 10, but you can never know which of the next 10 rolls will be the winners and which will be the losers. If trading is truly just a game of probabilities, isn't waiting for a flawless setup just proof that you do not actually trust your edge? This brings us to the ultimate truth about professional trading. It is a paradox that goes against everything you have been taught by the internet. Professional traders, the ones who pull millions of dollars out of the market year after year, do not try to catch falling knives. They do not try to snipe the exact top of a rally. Compared to retail traders, their entries are actually incredibly sloppy. This sounds completely wrong. How can a professional be sloppy while an amateur is precise? It comes down to the profitability bell curve. The relationship between entry precision and making money is not a straight line. On the far left side of the curve, you have very sloppy entries. You buy randomly. You chase massive green candles out of fear of missing out. You have no plan. You lose money. But on the far right side of the curve, you have hyper-precise entries. You wait for exact millimeter touches on trend lines. You use tiny stop losses. You miss 80% of the good trades waiting for perfection, and you get stopped out of the rest by market noise. You also lose money. The most consistently profitable traders in the world live directly in the middle of that bell curve. They live in the zone of good enough. They look at the chart. They identify a general area of value. They do not look for a specific penny. They look for a wide, messy zone where it makes logical sense to do business. When the price enters that zone, they do not wait for a perfect confirmation candle. They just accept a good enough entry. Often, they do not even buy their full position all at once. They buy a little bit early. If the price drops more, they buy a little bit more. They scale into the market like an adult managing risk, rather than gambling all their money on one precise bullet. They accept that their entry will be a little ugly. They accept that they will be slightly in the red for a little while. They do not care. Because they did not spend all their mental energy trying to perfectly time the entry, their minds are completely clear. They have conserved their emotional capital. They use that calm, rational energy to focus entirely on what actually matters. They focus on where their thesis is proven wrong. They focus on how to manage the risk. And most importantly, they focus on when to exit and put the cash in their pocket. If predicting the exact turning point of the market is the secret to immense wealth, why do billion-dollar hedge funds use scaling strategies instead of sniper entries? You do not need to be a sniper to make money in the markets. You just need to be a survivor. You need to accept the messiness of the chart. You need to let go of the ego that demands perfection. You need to widen your stops, lower your position size, and start playing the actual game of probabilities instead of the fake game of certainty. Stop trying to be perfect. Start trying to be profitable. If this psychological breakdown made you feel slightly exposed, if it felt like I was reading your trading journal out loud, then you are exactly the kind of trader who can actually fix this. You just needed someone to tell you the truth instead of selling you a dream. Hit the subscribe button. We talk about the real psychology of trading here, the messy, uncomfortable reality that actually moves the needle on your account.